Taking a look at XLM from the previous video, we can see from the high down to the low, XLM is getting rejected at the 236 retracement, which is about 29 cents, which would suggest that as long as XLM is below 29 cents, the price of the coin is actually still considered bearish. Now, you can also see that a major downtrend has formed, which is essentially right on top of the 236 retracement. You'll also notice that a larger, longer time frame downtrend is also at present. So for the sake of cleanliness, what we're going to do is actually mark the 382 at 34 cents and delete this retracement level so we can actually see clearly what's going on. If we zoom all the way out, we can see that the low from 2022 up to the high, the 382 is 27.4, which you can actually see we're potentially getting rejected at for resistance. So one would make the case that as long as stellar lumens is below this downtrend, then technically a move down to 21 cents is still technically in play. In order to invalidate this move down to 21 cents, we need to see stellar lumens stay over 27.5 and more importantly break the downtrend and move up to 34 cents. You can also see that there's support forming just as well as resistance, forming some type of downtrend slash falling wedge, which one would make the case that this is actually a bullish structure. However, it's only bullish if it breaks to the upside, which means that as long as we're still inside of the downtrend, it is actually bearish. And again, a move down to 21 cents is still technically in play. In order to invalidate 21 cents, in my opinion, we would have to see stellar lumens break over 33 cents, which is again that 382 that we highlighted from the beginning. And ultimately that would be breaking you out of this falling wedge, and you'd be breaking over the larger downtrend, which would signal that the price is actually bullish, in my opinion.